Hello everyone, welcome to this webinar today from ESS BIZTOOLS and our associates, COVID-19 Survival Plan. This is session 5, so we've been running these now for 5 weeks. Today we're going to give you an overview of predictive accounting case study and using digital transformation to generate leads. In this session, we're going to give you an insight into the utilization of three-way forecasts to assist your clients to understand where their business is headed. And that's going to be presented by Paul Barnaby. And we're going to hear from Trent Butler, who's going to talk about positioning yourself as an expert to generate new leads utilizing digital transformation. And I will give you an update of COVID-19 news update. I'm Peter Towers, the Managing Director of ESS BIZTOOLS. Welcome. It's now my pleasure to introduce you to Paul Barnaby, a predictive accountant consultant and the Australasian representative for Plan Guru. How are you today, Paul?
Thanks, Peter. I'm fine.
And I'm just sharing my screen with you now, please, and you can now proceed. Thank you.
Okay, so you're seeing my screen okay now, Peter?
Yes, thank you. Yeah.
Good. Okay, thanks very much for that introduction. My topic today is three-way budgets, how you can prepare those in under 60 minutes. And I'm going to have a look at a particular case study that's I've been looking at recently. That's come about since the COVID-19 crisis was on us. And perhaps just to introduce myself a little more, a bit about my background. I'm a chartered accountant. For a good number of years, I was managing partner of a second-tier firm. And during that time, I developed an interest which later became a bit of a passion in what I call predictive accounting. And predictive accounting is nothing more or less than looking to the future in terms of financial statements, the way we do with historic accounting. So looking at what our profit and loss or balance sheet, but in particular extra cash flow, looking into the future. So that embodies budgeting and forecasting. I have my own consulting practice called Beyond Accounting Technologies. And as Peter said, I'm also the regional integration consultant for the Asia Pacific region for Plan Guru, which is a US-based company that has a purpose-built tool for budgeting and forecasting. So I've worked with many hundreds of CFOs, accountants, and people in business in this area. And I like to think that my role is particularly to help accountants and CFOs look like superstars. So when we look at the business downturn, or in some cases it might be upturn caused by the COVID-19 crisis, never before has there been a greater need for looking at strategic plans and budgets. Because there's an old saying, probably a bit hackneyed these days, that if you fail to plan, you plan to fail. But that is so true today. And in particular, we've got to be able to measure the impact of this business downturn, but also strategize as the restrictions come off to look to the future and trade back to some area of normality. Because if you do know the impact of the crisis on a business, you can help that client to minimize, manage, or even avoid that impact. And in particular, with the government assistance that we've seen, both federal and state, it may force you to quantify those impacts in any event to make application for assistance. And no doubt many of you have done this many times already. And in particular, if you're looking to those government-supported loans where the big four banks are involved, they're probably going to demand a proper business plan, including budgets. So you're going to have to do it. And when it comes to budgets, just an estimate of revenue of cost is not going to cut it. you do need to have full predictive financial statements, including cash flow. So, you need a budget. What do? You reach for Excel, right? Wrong. The reason it's wrong is Excel's a great tool, but it was never built for budgeting. It was built as a general purpose calculation tool for chemists, for engineers, for architects, yes, for accountants, but never purpose built for budgeting. And one of the major reasons why I have such an anti for it in budgeting is it is very, very error prone. There's a real spreadsheet nerd. His name's Professor Ray Panko, and he's at the University of Hawaii. Look him up and you can have a look at his research papers. But he has looked at published Excel files, and he's found that 91% of them have got errors in them that the authors do not know about. I repeat, the authors do not know about the errors that are in them, and some of them are quite substantial. Now that's scary stuff. But if that's not enough, if you're going to do a budget in Excel, it's going to take you 10 times longer to do it than it would with a purpose-built tool. So why would you? So that's why I support, in my case, Plan Guru. There are a number of tools out there. I can certainly comment for anybody that would like to ask any questions on what's appropriate for particular circumstances. So what are we going to do? All right. Well, a couple of thoughts I'd just like to share with you on what should be included in successful budgets. Firstly, and I mentioned this before, they've got to be three-way. It's got to be profit and loss, balance sheet, and cash flow. Unless it's a startup that you're looking at, you need to start with known historic data, preferably, obviously, from the accounting system on the case involved. And here's the major one. It must be driver-based, not last year plus or minus, as I was taught to do when I first went budgeting. When I talk about drivers, I'm saying what actually motivates, what drives the business that we're looking at. Is it the number of transactions at an average transaction value? Is it a rise or fall in those numbers? Is it the investment in R&D or inventory? Is it the wage cost? Is it the terms that you give to your customers for payment? Is it the terms you get from your own suppliers? Those are all drivers and must be included in the budgets. When we look at the data that is included in budgets, we've got to look at budget based on the drivers. We've then got to compare that with actuals, but we've also got to have a rolling forecast. It is no good just having a budget, preparing it, giving it to the bank, getting the funding, and then putting the budget away and not looking at it. You've got to compare actual against budget and also do a rolling forecast. Obviously, in that case, variance reporting is a must. You must compare the actuals against your original budget or the forecast and see if the strategies that you put in place do need amending. And obviously, other reporting must be flexible and capable of being amended for the particular client concerned. So let's have a look at this case study. It is a restaurant. So as you know, they have been closed up, available only for takeaways. And this is a real case study. We do have the results to the end of March 2020. We know that their profit was marginal before the restrictions came on. They had been trading for 3 services a day, breakfast, lunch and dinner. But about a year ago, they decided to close up for the dinner service. And since then, their profit's been quite marginal. We have statistics on the number of meals that they're serving and the number of takeaways that they're delivering. We know details of the food and labour costs in terms of percentages. And we do know that they qualify for both JobKeeper and the government cash flow system. As a result of their marginal trading, they had an existing ATO debt, and they also were forced into bank overdraft facilities. So that's the background to it. And so let's go have a look at the results that we've got. And I'm just going to open Plan Guru now. And we're looking at their revenue statement month by month since last July. We're looking at the actuals up to the end of March. So you can see that their revenue was averaging around 42 to 43,000 a month. They were closed for a good part of the holidays in December, January, so down a bit there. As you can see, they've got a reasonable gross profit there, but down on the bottom line, you can see that their income before tax is a bit all over the place. And they've only made $10,000 for the whole year after paying wages. If we have a look at the balance sheet, you can see there that they've had an overdraft, so we've got negative cash on this top line here, varying between 20,000 up to 26, and at the end of March it was just under 10. And if you have a look further down the balance sheet, you can see here that they've got quite a significant liability to the tax office. It's been up as high as 30,000, which it is at the end of March. So not in a real good position at the time of the downturn. So I mentioned drivers. So what I've done in the case study, I've had a look in terms of the, let's have a look at the budget here. Okay, so over on the right-hand side, you can see I've budgeted from April through June and again into the new financial year. And what I've done is I've used this non-financial page in Plan Guru to work up the statistics. So what they were doing or what they were proposing was around 90 takeaway transactions a day at an average of $10. And they're open for 30 days during the month. So their post-COVID revenue is budgeted at 27,000. I've worked out their cost of sales based on the percentage. I've worked out their wages, but they did reduce their wages down to 4 full-time employees at the $750 a week or $1,500 a fortnight in order to comply with the assistance. I've then cast that forward into the budget. And by the way, Peter, if there are any questions as we're going through, I'm happy to field them as we go, but I'll hand questions at the end as well.
Okay, thanks, Paul.
Okay, so just pushing that forward now into the budget. If we have a look at the budget now for April, May and June, you can see there, oh yes, the other thing they were doing, they're not very far from the fruit and veggie markets in Brisbane. So they had an arrangement with one of the fruit and vegetable suppliers there that they were selling fruit and veggie boxes outside on a takeaway basis too. And they budgeted for 200 of those in a month at an average commission of $8 per tray of fruit and veggies. So a bit of extra revenue there. So that's the income statement. So you can see there the revenue of 28,000. And if we come down to have a look at the net profit after the wages of that 13,000 a month, you can see that we've actually restored a bit of profit. It's a bit marginal in April, but May and June 2021 and 10. I've actually got a report, which I'll just open up now, if you just give me a second, which shows the before and after data. Just hang on, here we go. And while I've bagged Excel as a budgeting tool, it is great for reporting. So if we have a look at the P&L before assistance here, you can see that we were losing before assistance, but after assistance in April 791, May 21, June 10. And if we have a look at the balance sheet, you can see that they were negative cash in April, but running up to a reasonably healthy positive cash amount in May and June. Again, if I just show you the profit and loss after assistance, which is on the right-hand side here, you can see down below here that they're getting the 13,000 coming in starting from May for the JobKeeper, and they also qualify for that PAYG assistance. So their PAYG is going to be remitted. That's an extra $7,000 there. And when we have a look at the cash flow, you can see here, there's the 13,000 and that coming in. And then later on, we're making payments to the ATO. We've paid here the 7284, obviously in May. But if I go back to the Plan Guru model now and go through on into the, I'll just close up that year. And if I go on into the 2021 year and have a look at the balance sheet, you'll see here that I've been reducing as we go through into next year till I've got the ATO debt down to virtually nothing, and then it builds up again. So just again to remind you how that's all come about, if I have a look at the non-financials now, going through into next financial year, I've built up saying July we might get some restrictions lifted. So we might be able to get in July 30 meals at an average of 16, and we'll start dropping down the takeaways, which were at 90, down to 70. Then in August, it might be further eased again. We might get up to 60 transactions in the restaurant, and we'll drop down to 50. And so our total revenue is getting up to around 47,000 going forward. Okay, so that's a bit of an example of what I meant by drivers. So in this whole case study would have taken just a bit less than an hour to put together. So this is, Peter, why I'm recommending to advisors out there, don't use Excel, find yourself a decent tool. Plan Guru is inexpensive, and you can very, very quickly assess a client's situation, as I have done there, and work up the strategies that take it from, in this case of case study, pretty marginal situation with negative cash flow into positive cash flow and start reducing debt. Okay, what more can I show you?
Paul, can I just interrupt a moment? If anyone watching and listening has any questions, can you please type them into chat and I will bring them to Paul's attention. Thank you. Thanks, Paul.
Okay. All right, so just to recap what I've just gone over, Plan Guru, as you'll see here on the left-hand side, has various items to it. I started with the non-financial, which was where I worked up the numbers to calculate the revenue. I was also calculating the wage cost here at 35%, and then measuring that against the 4 full-time employees. So if as we grew in revenue, we needed more employees than the 4, my tool here is telling me, because it's saying that we need some extra wage cost in August of 2,300, going up to 3,500 in September, and so on. And then by October, hopefully we're back to simply full-time running on 35% wage cost. So that flows through, that calculation is flowing through here to the profit and loss. You can see the wage cost coming down here. So there is my 13,000 a month until we start trading up again, and then I've linked that back through to those non-financial calculations. There's some more automation in Plan Guru. It's calculating superannuation automatically. It can calculate interest automatically if you've got loans, etc. And again, once it comes to the balance sheet, we are calculating the PAYG liability, for example, and indeed total ATO liability as we go through the year there. So Peter, I've probably condensed that as much as I possibly can today. I certainly recommend that advisors out there are assessing their clients as to the effect of their downturn and then the upturn, because as somebody said to me the other day, the opportunity once we get out the other side of these restrictions to outdo competition, if we're organised, is certainly one that we've got to take advantage of for our clients. So I'll stop there. If there's any questions, happy to field them.
Yeah, well, are there any questions? I've got none yet. So if you can think of any questions, can you please type them into chat, and we'll talk to Paul about it. Paul, if anyone on the live webinar today, or who's going to view this webinar recording in their own time over the weekend or next week, have any questions or want to have a discussion with you, how do they contact you?
Okay, I'll just go back to my slides a minute, Peter. Just hang on, I'll get down to where I was. Okay, I'll just go over the strategies that these guys used. They released the casual staff, they applied for government assistance, they looked at the strategies on the easing of restrictions and came up with that plan for reducing the ATO debt and getting back to a cash surplus and therefore profitability. So we had a look at the budget. If you do have any questions, there's my email address, paul@beyondaccountingtechnologies.com, or you can phone me. There's my landline and my mobile, and this should be on the recording once we're done today too, Peter.
Will be, yeah.
Yeah, so that's how that. I'm always happy to field a phone call. Okay.
Okay, thanks for that, Paul. Is there nothing else you want to add?
No, that's all for me today. Thank you. I'll stop my share now if you wish.
Yeah, okay, thank you. And our next presentation is from Trent Butler. Trent was unable to join us today, so we have pre-recorded Trent's presentation, and I'm just going to present that to you now. I now want to introduce you to Trent Butler, who's a chartered accountant, who is going to talk to you about how to position yourself as an expert and generate new leads consistently for your practice in an area of disruption and digital transformation. Good morning, Trent. How are you?
Hey, Peter. Well, yourself?
Very good, thank you.
That's good.
So you can give us your overview now. Thanks, Trent, and tell us your thoughts.
Good stuff. Well, I might just jump straight into the presentation, Peter, I've got prepared, if that's okay. I'll
very much so.
Just pop up and share my screen with everyone. And is that all coming up now?
Yes,
you can see that presentation?
Yes, thank you.
All right, thanks, Peter. And I'm just going to get rid of, I can leave it in the corner, my talking head. Sometimes it can be a bit distracting, but I'll leave it up there. So yeah, thanks for the introduction, Peter. And I've got a fair bit of content to get through, and my goal really is to give as much value as possible to the accountants on the line. So I'm sort of not going to hold anything back, but I'm going to go pretty rapid fire given the time we've got. So as you alluded to, Peter, I'm helping professionals generate new leads for their practice, really by simply starting conversations with their ideal clients and using the power of the internet to build a brand. And so really, as you alluded to, my background's actually not sales and marketing. I'm a chartered accountant myself. And so when I sat down to sort of go through this business development, process, I really just wanted to know what worked and what were sort of the 5 or 6 key things that firms had to get right if they want to grow their practice online. And so this is just, I'll go through this. This is just some of the practitioners that I've been working with and some of the results that we've been generating. And what we've found and our learnings from that process is it really comes down to what we call the 5 Ps. And I won't sort of go through every one of the 5 Ps in detail. I'll just go through sort of the 3 key ones that are sort of full of actionable tips and insights that people can start executing in their practice if they choose to. So the 5 Ps in total are positioning, profile, people, prospecting, and pre-selling. And really, when you put all those together, what we've found is that's sort of a predictable framework and a method for generating quality leads into the practice. And so I do want to spend a little bit of time, Peter, talking about strategy, because I find this is really where the magic happens, I guess, for a lot of firms. And it's really the uncomfortable truth for many, or the elephant in the room, if you like. And that's actually marketing for professional services firms is actually pretty hard work. And the reason that's the case is that a lot of firms generally, or at least from appearance wise, lack meaningful differentiation from the rest of the marketplace. And so when I say meaningful differentiation, it's not necessarily a nice logo, a well-positioned office, or a good-looking website. It's really something that's ideally achieved through expertise. And so meaningful differentiation based on expertise, really what we've seen it fit into one or more of these three categories for a professional services firm like accountants. So maybe they've got a different perspective on a certain area, and not everyone in the market will appreciate this perspective, but those that do will value it highly. And I'll come to a couple of examples or case studies in the moment of that. Perhaps you've got some insights that are deeper in some areas. I know, Peter, you're a fan of the of crowdsourced equity funding, for example, and that's one example tying it back to your business and your practice. You have an area of expertise that's deeper in one area relative to perhaps the rest of the market. And you've obviously gained that through experience, through the time that you spend and invest in that particular space. And you just spend more time working with a particular client with a particular problem. And the final category I see firms be able to demonstrate meaningful differentiation is through intellectual property. Perhaps you've got some IP that you've sort of built into the practice. And Peter, I know you're big on that as well with ESS and all the tools and support that you provide accountants in that space. And really that's intellectual property. And what we're finding is that some firms that we're working with are taking that intellectual property and building a strategy and a marketing and a business development plan around it. And so just some, as I was saying before, this isn't always necessarily easy or immediately obvious. And it's actually why, in my view, many firms don't actually pursue this. However, the good news is that pretty much every firm I do end up talking to, they do have some area of expertise that, if it's not at least first apparent, it is buried somewhere within the practice. And so some examples that this is one particular client that I've been working with for a while now, who is sort of transitioning from more of a compliance-based practice through to a sort of an outsourced CFO or advisory firm. And really, we've found, boiling it down, it's their core marketing message around that, if you like, is the benefit of an experienced CFO at a fraction of the cost. And that's an example of a perspective differentiator. So not everyone in the market is going to agree with that value proposition, but those that do agree with it, it actually resonates sort of well with them, and it elevates that firm within that particular segment of the market. Another example is a financial planning practice who has a unique client onboarding process based around cash flow modeling. So this was some IP that this particular practitioner had developed over time and found it was very beneficial to the prospective clients on that onboarding process. And we built an entire strategy and focus around that. And it sort of achieved some pretty strong market resonance and in turn attracted a lot of interest into that particular practice. Another one, a tax practitioner who perhaps has deeper understanding of tax planning and advice specific to medical professionals. And that's just, one example, if you like, of one profession. But that's, as I said before, that's sort of a depth of insight differentiator where you've got a bit of, knowledge of working with a specific type of professional or business built up over time. And then it's coming up and building a business development plan or strategy around that process. And so really, and I know most accountants on the line will appreciate this, but what I'm really talking about here is nothing new. And this is just a book by a thought leader in this space that was written. You're familiar with David
some years
Masters'
ago.
work?
Yeah, I've met David on two occasions, actually. He's a very interesting guy.
Yeah, good stuff. Well, he's been around for a while, as I'm sure you know, Peter. And this book in particular was authored nearly 30 years ago now. And it's just one example. And a quote from that is, "The broader audience you attempt to reach, the weaker is the impact. So rather than paying little attention to a lot of prospects, it's always better to give more attention to a smaller, well-selected audience. And so the key takeaway from this first P or positioning, and I sort of said it before, you want you and your firm to have a greater knowledge and perspective in a few areas which have less appeal to the broader market, but far higher appeal and value to a smaller segment of the market. And so before I go on, Peter, do you have any sort of questions on that topic? Because I know that's a really juicy one and we can spend hours on it. But is there any sort of things that come to mind that you think might benefit the people sort of listening?
Yeah, I obviously support the concept that accountants should be offering a broader range of services beyond compliance. I've never argued that accountants should stop doing compliance, as someone did accuse me of once. But I think accountants should be offering additional services, and that's probably going to lead to fewer clients, but clients paying a higher fee and clients being far more happy about the services they're getting because they'll then be getting a full financial package.
Yeah.
And I like the concept that Meister talks about, and it's brought back some fond memories now of David Meister. And that is, and not so much his chain smoking either, but anyhow, he had to plan his presentations around when he was due to have his next cigarette. I noticed.
Right, got it. Interesting.
But the concept of specialising in specific industries, you mentioned there one particular accountant had IP for medical practitioners. I think there's a lot more opportunities for accountants to do that, to benchmark their GPs or their steel fabrication businesses or their small cafes and get them together as a group and on a confidential basis, of course, be able to share data that I think means a bit more to them than the Australian-wide surveys done by the major benchmarking organisations. If you had 20 clients in a particular industry, being able to really zero down into their performance.
Yeah, got it. No, that's actually, I agree with all of what you said. And I guess a point of clarification there as well is I'm not sort of advocating people need to go and re-engineer their entire businesses or practices and get rid of clients that don't fit that mold. It's just, it's a concept that's ring fenced when it comes to actually implementing a business development or marketing strategy in the practice. So you don't necessarily shut the gate to everyone else that's potentially a client of the firm, but from a front facing and a marketing strategy, it's generally better to have that narrower focus from a strategic perspective.
Yes.
So I'll just keep pressing forward, Peter, because I've got a fair bit to get through. And I guess that's sort of the theory piece of the presentation. I guess for now, I want to give some actionable tips and insights. And I guess once you've got the strategy worked out, execution then comes second. And there's always a lot of confusion, particularly among accountants or generally other professional services providers as well, as to exactly how do you go down this journey. And what I see is people are told that they need to be doing various different things by various different peoples in the marketplace. And so they try and dabble in a whole bunch of areas. They might try SEO, or they might try a newsletter, LinkedIn, or etc. But what I typically find is that people get overwhelmed pretty quickly, and then all of a sudden the fire goes out with everything that they've been told. And then before you know it, the conclusion is that this thing just doesn't work. And really what's happened is they've just tried to spread themselves too thin, recognizing that it's not their area of expertise in the first place. And it can get pretty demotivating pretty quickly. And so really one of the things to keep in mind is just to keep the main thing and focus. So I'm an advocate, particularly for smaller practices that have a limited time to devote to practice development, if they're going to do it themselves, is spend your effort and energy in the one or two key areas that are going to move the needle the furthest. So it's the old 80-20 rule. You don't want to be spreading yourself too thin. You want to be doing, the 20% of activities that are going to get you 80% of the result. And so generally speaking, for most practices, not always, but in a lot of cases, a great starting point for firms is the LinkedIn platform. And the reason I sort of like LinkedIn Peter, is if you can imagine scalability and how personal an interaction with a potential client is, you can sort of put it on this graph or chart. So one-on-one or face-to-face is obviously highly personable, but it's not that scalable. It's pretty time-consuming to go and perhaps drive across town to meet people. And obviously it's highly effective when you're in front of them, but it's generally, you can't be doing that with everyone out there. And you can plot sort of various other bits and pieces as to where presenting and attending networking events, you know, Facebook and Google advertising, for example, just to touch on that, Peter, obviously very scalable in the sense that you can get across a large number of people, but it's obviously not very personal. It's very easy to just get past that. Whereas with LinkedIn, I've just plotted a few more there. LinkedIn's sort of the best of both worlds at the moment. It's still highly personal in its approach, and yet it's also quite scalable in the sense that when you know what you're doing and how to use it properly, you can actually get your message and your brand, if you like, and your practice in front of a wide net of potential ideal clients. And so the thing to keep in mind, particularly with LinkedIn and really any business development activity, is, you know, some people are going to have a provider and be happy, and that's completely fine. Some will be doing it themselves in the marketplace or trying to do it themselves, and they'll be happy, and that's fine. But there's always that segment that's sort of not happy and is desperate to find, for whatever reason, a great professional to work with. And that's obviously, that's great. And that's who we want to be finding and getting in front of. So where do we start? So the LinkedIn profile is obviously, and the online presence generally is the place to start, but LinkedIn profile in particular, it's one confined spot where you can sort of make sure your messaging is on point. And there's a lot sort of written, Peter, on profile, which I won't sort of go into now. And I'll, just because of time, but I guess the next sort of P we've got to talk about is once you've got your profile optimized and it's sort of resonating and on point with the strategy that you've come up with, the next piece is then how do you go about finding the people? Now, LinkedIn in particular, if you're going to go and action this online, it's got some great free search filters, but I'd strongly suggest for people that are genuinely serious about going down this path and using this as a strategy for building their practice, is to use a tool called LinkedIn Sales Navigator. Now, it's a paid service, but that's going to allow you to drill in and create some lists and find your exact potential client that you want to work with. And so, for example, I've just done and put some screenshots up here for the audiences to one example search. And so I think in this, I'm targeting accountants and various different people within companies between 11 to 50 staff with various different titles. And so within the parameters I've put into the search feature here, I've got 3,090 actual people that I can see that I can perhaps network with and strike up a conversation through the LinkedIn platform to see if there's a potential fit for collaboration. And so just a couple more search filters, and this one's particularly beneficial for local practices, so practices that are trying to work with a local market. You can drill in based on a proximity to a postcode as one example, and that will give you a defined list of people within that proximity to the postcode. And another one I like is the years at the current company. So you can get quite defined as to whether or not you want to target newer practices, newer businesses, newer firms, or conversely, if you want to be targeting and working with firms that have been in business for several years, this again is a great filter to really drill in and find those people. And another way of thinking about this as well, and not just obviously turnover and the size of the business isn't the only way of sort of working out who you might want to work with. But if you can generally apply the rule of thumb that, there's one full-time equivalent employee for every, say, $250,000 in turnover, you can use you can use the company size filter to broadly estimate the size of companies that you want to be getting in front of. And so tying that back into some Australian Bureau of Statistics data, we can see that the top sort of 20% of businesses are generating sort of $500,000 and above. And as I said, that may not be your ideal client, but if it was, then this is a way really to, I guess, to split the pack, if you like, and make sure you're only getting in front of the businesses that you want to, based on whatever your strategy is. And so once you actually know who it is you want to be sort of working with, the next sort of piece of the puzzle, if you like, is prospecting. And that's sort of how do we actually go about engaging those people on the LinkedIn platform. And due to time, I'm not going to go into the mechanics 100%, but I will just note that this is a study done by Microsoft, which shows it can take up to 12 touch points for a prospect to actually convert into a paying client engagement. Other studies have been done which show it's between sort of 6 to 8. But the point is that there needs to be a process once you actually find someone on LinkedIn to actually get the touch points in, so to speak, in a very professional, non-salesy way, and in a way that protects your time as well, to actually convert that person and get the touch points in to hopefully turn that into an engagement. And one thing I will say about prospecting on LinkedIn, because we've all experienced this, and I'm sure you have as well, Peter, is people bombarding you with stupid messages. No one likes that. And I'm certainly not advocating a spam-like approach. And it needs to be quite strategic in how you do it to make sure it's extremely professional and non-salesy, and in a way that actually gets them turning around wanting to talk to you. And so, as I've said here, the objective is never really to sell anything on LinkedIn. After you've done the necessary work and touch points, the first next step is logically a telephone call or a coffee offline, or a virtual coffee in this COVID world that we're now in. And now this is a bit of a deep dive and insight into how we work with some of our clients. We actually have developed some systems and processes around tracking all of our connections on LinkedIn and monitoring where those connections are within a database. So you can see here, just, we've segmented some of the market as to who we need to follow up with, who we've sent a resource to, who's actually converted to a lead or an offline conversation, and then also who's actually converted to clients. The other powerful thing, and as an accountant, this is sort of, it generally excites me, this piece, is you can actually, if you're doing it in a very strategic and systemized way, you can actually build and track the performance and resonance of your message as a business and firm and strategy to different segments of the market. So if each one of these campaigns represented a different type of client that you might be going for, you can monitor the statistics over, who's connecting with us, who's actually conversing with us, etc. And we can sort of tweak and pivot our strategy actually based on live data and live market feedback. And so that, I think, is a real sort of piece of the puzzle that a lot of people particularly miss when they do it themselves. And what we're doing is, over time, you start to see patterns emerge when you're tracking and being a little bit scientific with how you're going about this process. And really what ends up happening is, and this is sort of a good example, is when you go to a networking event, often you don't necessarily know who in the room could benefit from your particular service. And you end up sort of investing your time perhaps with the wrong people, or people you're not sure it's worth, it's not necessarily, worth your time investing in. Whereas with LinkedIn, it's a little bit like, your ideal client, if you were to walk into a networking meeting, they might be wearing purple, or whoever's not your ideal client might be wearing red. And so if you had that visibility, when going into a face-to-face networking event, it would be a lot more productive. It'd be a better use of your time, and a better use of the other person's time as well. And so that's really where we're seeing, and we're taking platforms like LinkedIn. It's really getting really targeted and strategic about who it is we want to be dealing with. And the other thing to note about this, Peter, is it's really opening up the entire country as a marketplace. So with, Sales Navigator, the search feature I showed before, that was Australia-wide. So that was a list of particular accountants that fit certain criteria Australia-wide. And so with that strategy and route to market as one example, you're no longer now limited or confined by your geographical location, and you can actually get that expanse and reach across the country. And so the last P I want to talk about, Peter, and I know I'm going quickly, but I'm conscious of the time that we have, is pre-selling. And I'll bring up your mate again. who says, marketing is truly about attracting clients, doing something that causes them to want to take the next step. And so since all clients are skeptical, they need to be given good reason to expose their problems to you, and need to do so without feeling that by responding, they are committing themselves to go all the way. And so one of the ways, and I just want to pull up and just demonstrate this as to how I'm executing this in my business and how some of my clients are starting to do this as well, is within our LinkedIn profiles, we've got this featured section where someone can actually click on that and it pulls up a live presentation, and people can easily watch that at will. It goes pretty quick. You can watch it at 2x speed. But what this achieves is it actually pre-educates the marketplace around my value proposition in particular. And so, as I said before, if you've got something unique about the practice that makes sense to build into a strategic business development plan, then you can plug it into something like this and actually educate the market in a very low cost way. And what inevitably happens with something like this, Peter, is it then turns people from a cold conversation, which is what's happening in the LinkedIn chat over here, through to someone actually deciding if they're a good fit for you or not. And so it reverses the dynamic, if you like. It gets them reaching back out to you to see if your practice can help solve their problem. And so I'll come back to the presentation. So again, just marketing is truly about attracting clients, doing something that causes them to take that next step. And this is just, I guess, an email I receive, and I get these pretty frequently with regards to the efforts that I'm doing. Hi Trent, did your online presentation yesterday. I'm looking at a few options moving forward. And so this is just an example of that actual strategy executed in practice. And so really what we've got here now is a mechanism of actually taking people directly off the LinkedIn platform into a very low cost, low friction education model from the client's perspective or potential client's perspective into a call or a conversation offline. And then once we've got that, now it actually makes sense to really crank up the other platforms as a mechanism of educating the market about your unique positioning and value proposition. And so, yeah, I'll just dive in quickly to talk about execution, Peter.
Yeah, that's okay.
And that's effectively what I'm up to at the moment. So we do a number of different pieces of this puzzle, but stage one, we generally work out strategy first. And from there, it goes in a number of different directions. But typically for most firms, it's profile optimization, actually sending out those messages, and then establishing a client acquisition or attraction system in the practice. And this is just very quickly a bit of an overview of how it is that we operate, our process. And we do it by a couple of different mechanisms. We can either do it all for you. For larger firms with an in-house marketing department, we can actually provide that training to the in-house marketing team to upskill them on how to execute some of this stuff. Or we also have like an online done with you sort of coaching arrangement where basically we do some work, you do some work, and we work as a team to execute and get it done. So just really quickly, Peter, it's not a sales pitch here. I just want to, if there's anyone on the line that is listening and is interested in some of the things I spoke about, I'd be more than happy to offer your accountants sort of a complimentary one-on-one session with me. It's completely free of charge. Really what we'd be looking to achieve in that call is the first step of our process. So learning a little bit about the practice, clarifying ideal clients, and then aligning on the all-important strategy, which is what actually makes all of this work. And so, as I've said here, there's no obligation. Once we actually have a plan in place by the end of the call, you can either get our help with implementation, or you can have a go at executing and put it in place, in your own practice by yourself. And there's some contact details. So I know that was very rapid fire, Peter, but did you have any questions or anything to go over, or
no?
Good to wrap it up?
Trent, thank you very much. I think that was a very interesting overview. Obviously, in these presentations, we have got a time limit because we're packaging all this into a total webinar of 60 minutes.
Yeah.
But people can contact you, as you said.
Yeah.
And what I'd be interested in doing, because I found that very, very interesting. And I'm sure there's a lot of accountants out there who are interested, or let me be bold enough to say should be interested, because this is the new world we now live in. Accountants need to be looking at how they're using social media to be able to communicate their particular position, their strategies to the marketplace. So thank you very much. And if you wish, I'd be quite happy in having a longer session recorded that we could place on our website.
Yeah.
Because we've decided only in the last couple of days to offer that to each of our affiliates, because I've noticed that some are pushing it hard to get through the 20 minutes or 30 minutes, whatever.
Yeah, I struggled there.
Time. No, that's all right. And this is important because this is what we're trying to do between ESS BizTools and our affiliates, businesses like yours, Trent, and that is to give an indication to the accounting, business advisory and bookkeeping professions that there is some light at the end of the tunnel. We're in difficult circumstances at present, or our clients are, and a lot of accountancy firms are, I also hear. And this is an indication of some of the strategies that accountants, advisors and bookkeepers might well utilize to give them a better chance at being able to market their services. And they should be starting pretty soon on getting ready for the end of September, I think. No use leaving it to the end of September, when hopefully this crisis is going to be reducing, but businesses will be wanting to get up and go. So I think this is a very interesting overview. So thank you very much, Trent.
Yeah, most welcome, Peter.
We will get back to you and we'll let people know when we've got that full hour or whatever it might be. Could be an hour and a quarter recording, whereby you have the opportunity of giving a longer presentation, perhaps that 1 hour webinar that you talked about before.
Yeah, brilliant.
So this is an interesting presentation. It's going to join Paul Barnaby, who's also going to be presenting some interesting material on how accountants should be using three-way budget material, budget, cash flow forecast, and predictive balance sheets. It's all part of this new wave for accountants of, where possible, using technology and using the internet to be able to offer us a wider range of services to clients. So thank you very much today, Trent.
Brilliant. Thanks for having me, Peter. Thoroughly enjoyed it.
Thank you.
Cheers.
I'd just like to give you an update on COVID-19 news that's going on. The ATO seems to be releasing updates on information every few days. They have made some interesting comments relative to the JobKeeper projection predicament. And in fact, they've issued a 94-page ruling. And an assistant commissioner made some comments. People can't predict the future. They can't have a crystal ball. Wouldn't it be wonderful if businesses are doing well in that period and didn't have to drop of 30%? They continue to be eligible, even though later on they might find their business has kicked in and people are shopping again, buying again out in the restaurants and cafes. That comment seems to clarify to me, and the actual 94-page ruling says that the Commissioner will accept your assessment of your turnover. So this is the turnover when you're comparing March 19 with 20 or April 19 with 20, or the 3-month comparison. We'll accept your assessment of these turnovers, but you are warned to make sure your clients have kept adequate records. Unless the Commissioner has reason to believe that your calculation of your projected GST turnover was not reasonable. So hopefully that clarifies what was being said by the Commissioner. The next item I just wanted to bring to you, and I'm sure you all know this, that the JobKeeper registration has been extended to 31 May. That applies to clients who are going to be making claims for the $1,500 per fortnight per eligible employee for April and May. They have to be registered by the 31st of May. The other bit of information that's also been discussed in the last week that just seems to have not had a lot of discussion is that if you have a client that hasn't yet qualified with a 30% drop, but experiences that drop in May or June or even July if they wish, they can then apply for the JobKeeper program, but they'll only be eligible from the month that their drop in turnover has commenced. And then as long as they're still paying those employees, they'll be able to claim the $1,500 per month. If you want any further information, and I hope you do, please go to our website, www.essbiztools.com.au. Our next panel meeting for COVID-19 is on next Friday, the 22nd of May at 12 noon AEST. You can register for that at www.essbiztools.com.au/webinars. The guest presenter that day is Amanda Gascoigne. Amanda is a chartered accountant who runs a practice situated in the beautiful Port Stephens area in New South Wales, and she's a coach and mentor to small practitioners and solo accounting practices all over Australia. And she produces a very interesting newsletter each Friday. And she's going to be talking to you about assisting your clients to emerge from the lockdown blues. And I've already told you the registration. We look forward to welcoming you. If you want more information, you can go to our website, essbiztools.com.au, survival in difficult times, learn more. Or you can contact us, send me an email, peter@essbiztools.com.au, or you can telephone me, 1-800-232-088. Thank you for your participation in watching this webinar live, or indeed watching it as a recording at some time that suits you. Thank you very much to Paul Barnaby for being with us today and making an interesting presentation on the use of predictive accounting and the preparation of budgets and cash flow forecasts. And also thank you to Trent Butler for his analysis of how we all might be able to use social media tools, especially LinkedIn, to assist you in your marketing of your accountancy firms. Stay safe and good luck in your firm. And if you have any questions, please don't hesitate to contact us. Have a great day. Goodbye.